So this chapter number 15, forms part of unit number 3, and this is a very important chapter as such from your knowledge point of view, not necessarily from examination point of view, because it is a very small and basic chapter, but this can help you a lot if you're planning your own business, or if you want to understand the business processes in detail. So the chapter's name is Relationship Between Accounting and Other Business Functions. So as you know, business consists of several functions, like you have production, you have purchases, you have services, you have marketing. So if there's marketing, which is a function of business, procurement or purchase, you have, let's say, production as well. And then you have your finance and account, or I should say accounting. Accounting happens to be at crossroads with all these functions. That simply means every function has to pass through accounting somehow. These functions are connected with accounting in a manner where these cannot function without involvement of accounting department. So the accounts department, how it will interfere with all these other functions, that is what we have to study in this chapter. So yes, here is a kind of diagrammatic presentation of different functions: production, marketing, purchasing, services, support services like IT, HR, etc. And business core objectives. So business core objectives are the reason why all these functions are created. But you see, accounting is at the crossroads. That means accounting is the one which will connect all these, or in a way which will involve in all other functions. So now you are aware about different functions. Let's start with different type of functions. Like purchasing is the first function which we are taking here, also known as procurement. Now this includes purchase of stock, also purchase of plant, machinery, buildings, anything which the businesses are acquiring or purchasing or procuring. That will form part of your purchasing department. The objective of purchasing department will be to get the best deal in the market. Okay, think it in a way that you are heading a business. What do you want your purchasing department to do? You would want your purchasing department to get you the best deal, get you the best credit period, get you the best quality of raw material. Also check that whether the inventories are there with us, or we actually need to purchase, right? So we can't just shoot purchase orders without checking whether we have what is required already in our inventory, in our stores, right? So, but now we have to also understand what is the involvement of accounting in the activity and the function of procurement. So the purchasing or buying function is responsible for placing and follow-up of orders. How it happens is you have a purchase department. Now, anywhere in the organization, if anyone wants something, they try stores. For example, this is workshop number 1. Workshop number 1 requires a certain kind of raw material. So they will approach the stores department. Now stores department will tell that whether it is with them or not. If it is not with them, then this workstation number 1 will raise a purchase requisition, known as PR in short. Now what is this purchase requisition? It is a request to purchase the kind of raw material which is required by workshop number 1 and which is not with us in the stores. That means the stock is out, there is no such raw material, or the raw material is less than what is required by workshop number 1. So now this information goes to the purchase department. This purchase department is responsible for electing a supplier. So there can be many suppliers. There can be let's say there are 4 suppliers, supplier 1, supplier 2, supplier 3, and supplier 4. Now this purchase department will ask for quotations. First of all, this purchase requisition has to convert into purchase order by the confirmation that there's actually nothing in the stores, right? Then when we have made up our mind that we need to purchase this thing, we'll approach the suppliers. Now these suppliers, why we are approaching 4 suppliers? Because we want competitive buying. We want to buy from the supplier who is providing at least cost. Okay. I guess anyone who's running a business and is of sane mind will try to get the best deal, right? So you would like to approach multiple suppliers, and then you choose a supplier, maybe by bidding. Let's say we are giving them a bid that we need 100 tons of, let's say, chemical X. We need 100 tons of chemical X. Now this chemical X can be procured from any of the 4, but we will try to procure it from the vendor, from the supplier who is providing it to us at the least cost, in the earliest possible way, with the best quality, with the best after sales service, with the best terms overall. Okay, so whoever provides us the best term, not just in terms of money, not just in terms of cost, we'll choose the one which is providing us best terms, maybe the best credit period, anything, right? So just the price is not conclusive. We have other areas also where concessions can be claimed by the purchasing department. So purchasing department will in this manner choose the best terms, and then a purchase order, PO, will be raised. This purchase order will go to the chosen supplier. Let's say we have chosen supplier number 3. So supplier 3 will get our purchase order, and supplier 3 will send us the raw material which is required in our stores. Now workshop number 1 will get its supply from the stores, right? This is how it happens. Here supplier is external to the organization, and rest everything is internal to the organization. But what about the accounting department? I've told you the whole process, but there's no mention of accounting department. See, every time whenever any activity is done for capturing data or for making numerical decisions, there is a need of accounting department. Let's see how accounting department is involved in procurement activity. So the first thing is establishing credit terms. This is very important. Credit terms means credit period generally. The payment terms, how we'll pay our suppliers. So procurement department will decide the supplier, yes, that's fine. But help of accounting department will be required in establishing the credit terms. So the accounting department will work with the buying department. Now, what is buying department? Same, procurement department is buying department. You don't need to confuse yourself with this. Purchasing, procurement, buying department, whatever you can call it. So the accounting department will work with the buying department to liaise with suppliers to obtain a credit account, and to negotiate the credit terms which are acceptable. Overall, accounting department has this required set of skills and negotiators who will negotiate on behalf of the buying, that means the purchasing procurement department, with the supplier to obtain the best credit terms. Okay. Second thing is prices. The accounting department can advise the buying department on the maximum price that should be paid to maintain margins. Now, what is this? Accounting department should have an idea of how much the raw material is costing us. So generally how it is done, see, all these 4 suppliers need not necessarily be giving us the best price. So we usually reverse work our cost. For example, whatever workstation number 1 produces is sold in the market for $100. Now, anything which is sold for $100, if we remove the profit out of it, let's say $20 is a profit. That means whatever we produce is costing us $80. And this product requires so many other things and chemical X as well. All right, so chemical X, chemical Y, Z, A, all these things are required. Now Y, Z, and A together makes $60. That means our target price for chemical X should be $20. Otherwise, we'll not be able to maintain our cost of $80 and we'll not be able to maintain our profit of $20. I hope you get it. So we are reverse working. How much should we agree to pay for chemical X? This is how we reverse worked it. And the reverse working gives us the decision that it should be procured for less than $20 per unit or something, right? So this $20, how it is worked out? This is worked out with the help of accounting department. So that's how accounting department advises. See, accounting department is just helping the procurement department. It is all responsibility of the procurement department to select the best supplier and get the supply in time. But accounting department is just helping the procurement department so that the overall profitability, overall objectives of the business are taken care of. So now if we look at this again, this purchase or procurement department is liaising with accounting department. Why? So that the business objectives can be taken care of in the best manner. All right. Yeah. Now, next thing is payment. Who will process the payments? Obviously, the accounting department will process the payments. So the payments may be approved by the buying department, but are made by the accounting department. Obviously, whenever the procurement department buys something, it comes to the stores, okay? It is checked for quality, that is known as QC, quality check. When the quality check is done, the goods or materials are unloaded. When these goods and materials are unloaded, then information is sent to the purchasing department or the procurement department that yes, we have received the material which is required. Now the purchasing department requests the accounting department to pay the suppliers what we owe them, right? So this communication also has to go from purchase department to accounts department. Now accounts department should not blindly pay it, okay? Accounts department should check the invoices, should get all the necessary information, maybe from the stores department also, that how much raw material is received in quantity and how much was the negotiated price as per contract. Then they will work out, okay, this much should be paid, and they will match it with the directions of purchase department, and then the payment will be done. So accounting department is working as an agent as well as a cross-check mechanism as well for making payments. Also, during all this exercise, data is created and data needs to be captured. Like the purchase exercise in itself is a transaction. Purchasing first and then paying. These are two different transactions. These needs to be recorded, right? The order details will be input by the buying department and details passed to the accounting department. This is how it is done. So buying department will input the details. It is done through computer software. Now it needs to be approved by the accounting department. That's how accounting entries are passed nowadays. Now, next is inventory. The purchasing department will consult with the inventory section. Now, the inventory section rests with whom? Obviously, the accounting department. So, purchasing department, before passing the order, will check with the inventory section of the accounting department to determine the quantity of item already in stock. That's how the purchasing department will know how much to order and how much we have in-house with us directly. So, the quantity required, the urgency of order, everything is established by cross-checking with the inventory section of the accounts department. But we can also check with the stores department. Yes, we can. But checking in the stores is difficult. Why? You have to physically go to the stores and then find the material. Maybe the material is somewhere, but the store is so big that you do not have the information where it is. So the better way is to consult the inventory section of accounts department. So accounts department will have an inventory section. This inventory section will have all the details, like this kind of spare part or this kind of raw material is placed in this rack or in this area in the stores department. Store is more like a warehouse only. So these are connected. In all, accounts department has its intervention in inventories as well. Next is budgeting. Now, budgeting is basically planning, estimating for the future. In budgeting also, in planning also, accounts department plays a key role, especially for procurement purposes. The accounts department will consult with the buying department on likely costs in preparing budgets, what costs they are expecting for their future purchases and etc. So the accounting department will prepare a budget for the whole organization. So they will receive their data from procurement department. So this is how purchasing or procurement department gets intervened by the accounts department. I would say not intervened, or you can say this is how procurement department is related to accounting department. Now, there is this illustration number 1 for better understanding. XYZ Limited is a company manufacturing handbags. So this is the output. XYZ company, it's our company for which we are studying it. Describe how the buying department, now buying department means the procurement department or the purchase department, liaises with the accounting department when buying some leather. Now this leather is what? Raw material to make handbags. Handbags are finished goods, yes. From DEF Limited. Now, who is DEF Limited? It is the vendor or supplier. So in a way, we are purchasing from DEF. XYZ Limited is procuring from DEF. Now, the purchase department of XYZ Limited has to liaise with its accounts department. In what way they will be this liaising? That is what we have to understand in this illustration. So try doing it this way. That let's take the first one. Establishing credit terms. Who will establish credit terms? Accounts department will establish credit terms with whom? DF department's relevant employees. That relevant employee is generally known as credit controller. So credit controller will take decision regarding how much of credit and how much of credit period is to be granted to XYZ Limited according to XYZ Limited's previous performance, financial position, and so on. There are many things. So the buying department will advise the accounting department that the preferred supplier is DEF. Obviously, yes. The accounting department contacts the credit controller of DEF and provides the information required to set up the credit account. That's fine. I guess you were able to judge it. Now let's talk about prices. Who will decide the prices? So the prices are to be reverse worked by the accounting department so as to get an idea how much the price should be. Okay. So accounting department obtains the cost estimate for the handbags being produced. It discusses the buying department how much can be paid for the leather in order to maintain margins. So you'll check your margins, you'll check your profitability before choosing the appropriate supplier. And for that exercise, we need whom? We need the accounts department. So the same story is repeating in this illustration, which we have discussed here. I guess you'll be able to do the rest of the part of this illustration. So this is an assignment. Also, there's another TYU. Yes, TYU1. Same, it is for the same. Purchase and accounts department, relationship between purchase and accounts department. This is also your assignment. I hope this much is understood. Now the next department is production department. This production department is responsible for producing. So the diagram which I showed you, sorry for my presentation. This diagram, when I was talking about the different workshops which you have, these workshop number 1, workshop number 2, 3, 4, these are part of production department. So production department transforms the raw material into finished goods or output services. Basically, inputs are transformed into outputs in the production department. That is a basic function. Now we have to understand how it is related to accounting and what is the involvement of accounts department and production department. Okay. So the production department plans and oversees the production of goods. It liaises with the accounting department in the following manner. First is cost measurement, allocation, and absorption. So there is an extensive exercise of how much of cost is incurred. There's another subject altogether known as cost accounting for this purpose, some part of which we will study in F2, management accounting. So cost measurement means measuring the cost on maybe each product. How much of cost is incurred for the production of this product? We need to calculate it so that we can judge a price at which we are selling it. To work out the selling price, which is beneficial for the organization, it is very important to judge this the cost which is incurred in producing 1 unit of a product, right? So cost measurement, allocation, and absorption. What are these words? Allocation and absorption means allocation is done for costs which you directly know that it is part of the production. For example, you are producing toys. So this is one toy, this is another toy, and so on. You produce different toys. Now, how much of metal is consumed in producing a toy? This can be judged. Okay, so this is allocated. But how much of the sweeper's salary forms part of this toy's cost? There was a floor sweeper working in the same workshop where these toys are manufactured. This floor sweeper charges a salary for his work, for his services. Why he is sweeping the floor? Because he is contributing in production of these toys. That means whatever cost is incurred in hiring the sweeper, it should be because of these toys, right? Indirectly. How much can we allocate? How much can we actually charge on these toys is known as absorption. So in detail, you'll study this in financial accounting, but I'm just giving you the idea of the direct allocation and indirect absorption. So allocation and absorption, I guess you got the point. Overall, we need to identify how much of cost is incurred in producing 1 unit of a product, right? So the production department measures quantities of material and time used. This whole measurement of time or quantities or money, it is done by accounts department, right? The management accountant gives monetary value to them. Monetary value means in terms of money, they try to measure it so that decision making can be done, so that we can decide what should be the selling price, or shall we produce this item or not? Shall we stop it or what, right? So costs are then allocated and absorbed. How allocation and absorption is done, I've told you, to calculate the production cost. The basic objective is to find the production cost of 1 unit, you can say. Why do we want to find the production cost? Because we need to judge how much we shall put as the selling price. Generally, costs are decided this way. You first take out your production cost and then you add some profit margin so that you can work out a selling price. All this is advised by the production department but done by the accounting department, right? Second thing is budgeting. So again, budgeting is a extensive exercise. Production departments also give some idea in budgeting from their point of view. So the production department will decide how many items of what type are to be produced. And this is how money will be set aside for activities involved in production. Cost of producing these will be determined by accounting and production department together and incorporated in the overall budget. So budget is for the whole organization, but information has to be derived from all the different functions, from all the different departments, and that's how we get information from the production department as well. So next is cost versus quantity. Cost versus quality means, shall we try to reduce our cost or shall we try to improve our quality? This type of decision making has to be done in consultation with accounts department. See, if you try to increase your quality, obviously your cost will also increase. But the overall objective for an organization should be to reduce cost, at the same time increase quality, or to reach at I would say trade-off where you are satisfied with the cost and with the quality as well, right? The cost is also not too high and the quality is also not too low. So this trade-off can be reached with the help of accounts department. So production and accounts department will discuss the features that can be included in the products. So more features in the product, that means more cost, right? But the quality is better. So you need to understand the consumer's requirement. So for example, you are making a toy. If the toy has multiple features, that will be an expensive toy. But you should understand the requirement of the child who is going to play with the toy. So if you think that child will not require so many features, we can reduce the features, and that's how we'll be able to reduce the cost also, and then the toy will become more affordable to other families also. That way you can increase your sales, right? So it is important for the production department to decide what features they want and what features are not essential. And that's how they can control the cost, simultaneously increasing the quality. And the raw material that should be used. So for example, the toys should not be made up with objects which can be swallowed by kids, right? It should not be made up of lead because that's hazardous to the health, things like that. So you should think about the quality as well. So accounts department will help the production department. Both the departments will sit together and decide on the cost and quality trade-off. They should agree which better quality materials and features justify the extra cost and discuss how to maximize quality and profit at the same time. Okay, so this has to be done in consultation with obviously the accounting department. Next is the inventory. The production department will liaise with the inventory section. Now the inventory section rests with whom? Accounts department. To ensure that there are sufficient raw material in inventory for the production that is planned. So production department will plan its production. Let's say production department is planning to produce 100,000 units this month. But do we have raw material for 100,000 units? Do we have it? This has to be checked with the inventory section. And if it is not with us, then obviously procurement department will be involved in the same way as I have explained already while discussing procurement or buying department, right? So inventory section of accounts department will be reached out in case production department is planning for a production run, because they need to ensure that we have all the raw materials in sufficient quantity to achieve the desired target. Again, another illustration. XYZ Limited is a company manufacturing handbags. Same handbags. Company has commissioned a designer to design a new style of handbag. And discussions are taking place about the material to be used and the quality to be produced. Quantity to be produced. Describe how much accounting and production department, how accounting and production department would laze over this. So again, all those 4-5 things, the budgeting, inventory, cost, allocation, quality, and cost trade-off, things like that. We have to, again, do the exercise for in this case as well. So I think this is easily understandable and can be taken as an assignment. Next is our marketing department. So production and procurement you have understood. Marketing department or the marketing function is intended to increase the sale. Overall sale has to be increased. And then that's why we undertake a lot of activities. All such bunch of activities form part of marketing. That includes pricing, that includes deciding the features which will be there in the product. That includes promotion, advertisement, right? All such things are a bunch of activities form part of marketing. You can also say that there are 4 P's of marketing. I've already explained it in a different chapter. In chapter number 2, you have examined what marketing function is. All right. So marketing department coordinates with the accounting department. How? First, let's take the budgeting part. So again, marketing department also has some plans. They also wish to increase the sales. They also wish to spend something on the sales. So marketing department will provide that part of data for preparation of budget, which is, you can say, related to marketing department. Okay. So accounting department will discuss likely sales volume for each product with the marketing department in order to produce a sales budget. So this is generally the starting of budgeting. First, you establish how much of sales you are going to make. Then you reverse work the production, the raw material, and other things accordingly. So this input will come from marketing department, that how much they can expect, how much the business can expect as sales in the upcoming year or upcoming quarter or upcoming month, whatever is your budgeting period. Okay. Next is advertising. So advertisement will involve some cost, and for spending any cost, you obviously should have some plan. Accounting department will help the marketing department in setting a budget for advertisement, and also you have to monitor that budget. So in setting a budget and in monitoring whether it is cost effective or not, this has to be done in consultation with accounts department. So accounts department is basically the number people. They will calculate, okay, is it beneficial or not? For every department, basically they are doing the same thing. For example, they could help in measuring new business generated as a result of different advertisement campaigns. So if you compare that, okay, due to different advertisement campaigns, we are able to generate 100,000 of sales. This is additional sales, okay? But the cost in making these campaigns was around 90,000. So you can say that, okay, this is not that efficient marketing. Okay. So this comparison should always be there. What if this becomes like this? Such a promotional activity is not good for business where you are spending more and realizing less due to the additional campaigns. The additional sales is not that much, right? So this thing has to be compared, and these calculations are done by whom? Obviously the accounts department. Next thing is pricing. So pricing is one of the P of marketing. You have to decide the correct price for a product. Otherwise, if the price is too much, the product will not sell in the market. The product will not find customers in the market. And if the price is very less, then there will be sales, but there will be very less profit, or the profit will not be at the fuller extent. So correct pricing is very important. Now, who will help the business decide the correct price? Accounts department will. Okay. So accounts department will have input into the price that is charged. Often products are priced at cost plus percentage. So this cost has to be obviously be calculated by whom? Accounts department. And a percentage will be decided by the management that, okay, if the cost is 100, then we want to make 20 on it as profit. Overall, the sale prices can be decided as 120. But who will give us this cost figure? This cost figure has to come from accounts department. So even if the marketing department determines the price based on market forces of demand and supply, they will need to consult the accounting department, because the whole exercise of deciding the price should be at the end beneficial for the business. As I told you, accounts department is at the crossroads for all the departments and the business objectives. So in order to fulfill the business objectives, accounts department will extensively work with every department or every function of the business, right? Next is market share. Now, calculating the market share also will involve some calculations. The accounts department can provide the marketing department with information on the sales volume for each product, so that the marketing department knows how much of the overall market share they have, and they can compare it with their targets to be achieved. Okay. So simply wherever there is calculation, that calculation has to be done by the marketing department. In many companies, accounts department, in many companies, there can be a great deal of antagonism between marketing and accounting, especially over pricing and cost control. Yes, there can be clashes. There can be discussions. Why? Because marketing department they would like to press their point of view, and accounting department will tell you things from the profitability point of view. So you can say there will be a conflict of objective. Marketing department's objective is to increase the sales or the turnover, but the accounting department's objective will be to increase the profitability. So there's a difference of, you can say, objectives. That's why there can be antagonism between marketing and accounting department. Now, next is service provision. That is the last activity which we'll discuss in this chapter. We need to understand how provision of services to all these departments, support services, for example, will form part of uh, how this interacts with accounting. The basic problem with service provision is that there's no physical form. So accounting becomes difficult here. Since it is intangible, accounting becomes a very different exercise. So companies very often provide services to customers at the same time as a sales or afterwards. Example, a computer retailer. So if you are a computer retailer, you would sell your computer, no problem. But whenever a computer uh, faces a computer purchase, a client, customer faces any problem with their computer, they will get back to you for support, right? You may be charging some extra fees, but they will come to you because the computer is coming from you. Who knows the computer better than you, right? Or it happens in case of car or motor vehicles as well. So once a car or motor vehicle is sold, the servicing is required for that vehicle from time to time. It is provided generally by the agency who's selling it in the first place. So that service provision forms part of output of any business. Also, there can be internal services also. So there are service departments who are providing services to production departments. Overall, there are some limitations with services because first of all, these are intangible in nature. So services are said to have four main features. First, we'll understand what services are. First of all, services are intangible in nature. That means they do not have any physical form. Services are activities undertaken by an organization on behalf of its customers and therefore cannot be packaged for the customer to take away with them. So service is something which is not doesn't have any physical form, cannot be sold as a product can be, as goods can be. So example, a taxi driver provides a service carrying customers from one location to another. Customer do not have a permanent tangible product that they can keep. They're just getting a service which is consumed and absorbed at the same time because services are very perishable in nature. So that is another characteristic, but yes, that is that. Next is inseparability. Services are very difficult to separate from the service provider. At the place of service provider, only generally services are provided. So services are often created by organization at the same time as they are consumed. So consumption and production of these two means of the service cannot be separated. So at the time of production only generally the services are consumed. For example, I'm teaching you. So when I'm teaching you, you're consuming it right now only, right? So at the time when this service is being provided to you, you're consuming it. Now you would say that later on I'll watch a recorded lecture. Well, you are doing that. So whenever you're watching the recorded lecture again, that time only the service is provided and that time only you're consuming it. So there's inseparability between production of that service and consumption of the service. Both are happening generally at the same time, right? So you can't tell the taxi driver to take you to some other place and the taxi is going separately and you are going separately, right? It cannot happen that way. It's unimaginable. A taxi driver will create the service they offer as they are carrying a passenger to their desired location. So when they are carrying the passenger, they are providing service. And when the passengers are being carried, they are consuming the service. So the production and consumption happens at the same place. Third is perishability. Services once provided are very difficult to replicate, or I should say, service if it is provided at one point, it cannot be stored for later on. So, for example, a taxi driver cannot take a customer to the same location at the same point in time twice. So, if you are going from point A to B, the taxi driver is moving with his cab, and if you are not there, obviously you miss the drive and then you miss the service. You are flying from city A to B. You missed your flight. No, flight is a service, okay? If you missed your flight, you can't say that, okay, I have stored it in my boarding pass and now I can avail it in the next flight. No, you cannot. So services in this way are very perishable in nature. These cannot be stored for later. Next is variability. Now, services are not unique to every person. Services may differ from person, from the receiver's point of view and the provider's point of view also. Each service is unique and cannot usually be repeated in exactly the same way, making offering a standardized service to customers very difficult. So services are very variable in nature. No doubt with extensive effort, replication is possible, but it is not generally the exact replication. No two burgers which you eat at McDonald's will be the same, okay? There will be slight differences, even if they are very well set up with the replication process. So services usually have these four characteristics, four features. Now, how is the service provision entangled with accounting? So there are several issues about which service departments may need the input of the accounting department. Now, what should we charge? That is a basic question which should arise. Because as we said, services are different for different people. No two people are getting the same services. So how should the services be charged? So for example, you should be charged on your internet connection on hourly basis or on consumption basis. It means how many gigabytes of data you have used. According to that, or how long you are using that data, for 4 hours, 5 hours, 6 hours, according to that. So there can be alternatives. Accounts department helps the service provider in understanding how the rates should be put for the services. So this is hourly rate which the company charges clients. It should be higher than salary, as it should include a share of the overheads. So for example, you have hired IT professionals and you outsource these IT professionals to others. Now, whatever you are charging from the client, it should be more than what you are incurring for hiring that IT professional. I hope you're getting my point. So however, if the charge out rate is too high, customer will not use the service. So you again have to make a balance. You again have to make a trade-off between what you want to charge the customer and what the customer can pay. Okay. Next is estimating costs. Now, okay, estimating what should be selling price is difficult. Imagine about estimating the costs. So since the services are not uniform, the inputs in these services are also not uniform. And that poses another problem of estimating the cost. Problem arises in determining the amount of overheads. Overhead means expenses. Okay, those expenses which are indirect in nature are overheads. These overheads are generally required to be absorbed. Okay, so the problem arises in determination of amount of overheads to be included in the charge out rate. Also, if the service takes longer to provide than expected, the company may not be able to pass on the extra cost. This is a challenge. So for example, you're charging 500 for installation of a television. So this installation of a television, which is costing 500, it may cost more in case the infrastructure is not that well, or you have to make extra fittings, extra screws, extra arrangements, right? So, and some places it can be very easy as well, but you are charging the same rate. And you might not be able to pass on the extra cost in a particular case of installing a television to the client. You cannot say that, okay, since we have used 50 screws extra, they're charging you 40 bucks more, right? Things like that are a problem with services. It is very difficult to estimate cost. Next is problem measuring benefits. Now you also need to understand, is it beneficial or not for the company to provide services? So market conditions may mean that charge out rate contains a very low profit element. Company may question whether it is worth carrying on these services or not. For example, you are selling cars, plus you are providing services, after sales services. Now the service charges which are charging for after sales services are very less. And this is creating a problem of loss for you if we talk about the service division only. But this exercise is helping you in selling more cars. So you are selling more cars because you have a service facility. If you do not have a service facility, cars sold will be lesser. So you are generating profit here with a very little of loss here. The profit which you are generating here is much more as compared to the sacrifice which you are doing here. So that way, the decision making is very important and you should see the overall picture. The problem is that the benefits are intangible and not easy to measure, but nevertheless real. Company with effective service provision has happier customers, and happy customers are more likely to buy from the company in future. Only because of this after sales service, good after sales service, you may have returning customers, and those returning customers will give you much more benefit than you have lost here. Okay, but establishing the fact that okay, is it actually benefiting or not, that is very difficult because things will happen in future and many benefits cannot be measured readily in monetary terms. So that's a challenge. These are the challenges. These are the areas, sorry, in which accounting helps. So you can say that deciding the charge out rates, estimating the cost, and decision making whether to continue service division or not. All these areas require decision making, which has to come with the help of accounts department. The accounts department will come up with figures, monetary figures, and in light of those monetary figures, it will be easier for organization to make decisions. Again, illustration number 3, that's an assignment for you. And PYU2 is also an assignment for you. So that's all about this chapter. This was an easy chapter, which was basically focused on the role of accounting and functioning of all these activities so that the business objectives can be achieved in an efficient and effective manner.